Welcome to the Let's Talk Crypto podcast, where we discuss the latest Bitcoin, blockchain, and digital asset news.
Hey everybody, hope you're all well. We have a very exciting interview for you this week, something that I've actually been looking forward to for quite some time now. His name is Socrates. He's quite well known on Twitter. He's part of the Hyperwave channel with Tyler Jenks and Leo World, and he's got a lot of interesting insights into online poker, gold, and Bitcoin, and on top of that is a full-time trader. I really hope you enjoy it, and with that said, let's get going. Hello, welcome to Let's Talk Crypto. We're very excited to start our show today. It's going to be based on trading. We're joined by Slava, Suyash, and our very special guest, Socrates. Good to actually speak to the man himself. I've actually been following Socrates on TradingView and Twitter for quite some time. Hi, Socrates. How are you?
How's it going, Wes? I'm doing excellent. I appreciate you guys having me on the show. I just got done listening to the last podcast on Ethereum, and that was definitely some good information, and it was good to get a feel for what you guys are doing, and I definitely am very excited to be on today.
Oh, great. Well, thanks a lot, man. Yeah, we're still pretty new at this. This is quite a steep learning curve, but yeah, we're in a similar space to you, the crypto space, and I'm not sure if you know it, but I also trade sort of part-time, nearly full-time, maybe not quite as much as you. Where are you calling from today? Where are you?
I am high in the Rocky Mountains in Colorado.
Wow. Okay. Is it, you must be in your summer months there now, right?
Yep, sure enough. It's just started to turn from spring to summer just in the last few weeks.
Okay. Yeah, well, Suyash and myself are based in Mauritius. So we're in the southern part of the world on a tiny little tropical island called Mauritius. But it is winter now, but our winters are very mild. It only gets down to about like 18 to 20 degrees Celsius. So yeah, we're a bit spoiled with that. Just a little brief intro. I mean, if one looks at your Twitter profile, you've got a description there, a former philosophy student, former professional poker player. I love that part. A former insurance agent, financial advisor, but now you're a full-time trader and financial revolution prepper. That's awesome. So if you don't mind, give us a little bit of background. How did you get from philosophy student to financial revolution prepper?
Well, that's definitely a good question, one that I'm more than happy to answer. So back when I was in college and studying philosophy, I kind of got bit by the conspiracy bug, and that was when somebody explained to me that the US dollar is no longer backed by gold, and that just kind of blew my mind. And ever since then, at about 18 years of age, I've been a big gold bug and a big-time believer in gold, and to a lesser extent silver. And basically how I got into crypto was a bit of a unique situation where I actually got into Bitcoin to use it, opposed to just speculate on it. So I dropped out of school to play poker professionally in 2009. I played online, did real well, moved out to Vegas, played in the World Series of Poker and whatnot, and continued doing that until 2011. And that is when the United States government outlawed playing poker online, basically made it illegal overnight, shut down all the biggest websites. Not only did they shut them down, they seized their bank accounts. So imagine if Coinbase and Gemini and Binance are all shut down overnight, and anybody with funds on there now has no access to their funds. It has to go through the U.S. government court system. So essentially, that money was locked up for years. Didn't have any access to it. Anybody who was playing seriously or had a significant amount of money on there was pretty much up shit creek, and that led to some people, looking for alternatives. I flew to Canada and set up a bank account in Vancouver and used that to wire money to websites that wouldn't necessarily accept U.S. citizens. I just use a VPN and a Canadian bank account, and that worked for a while. And then somebody made a post on 2plus2, which is the biggest forum for online poker, saying that there's this new thing called Bitcoin, and that maybe it could be used to circumvent the payment processors, which are basically, that's where people were not allowed to deposit online because nobody would process payments. So we got some websites like Bovada and America's Card Room where they would now accept Bitcoin as deposits. And it would allow you to play poker basically anonymously and not have to worry about the regulations from the US. So essentially, when that came about, I had already moved on from playing poker. I had gotten into the financial industry, started selling insurance, and became a financial advisor. Started in commercial insurance, working for somebody, and then eventually acquired my own agency. So by the time that there were Bitcoin available to deposit on poker websites, I had already kind of gotten into the financial world and wasn't as interested in playing full time, but did use it as a hobby and to kind of play part time. And that's when I started to really delve into what Bitcoin was and my nature of being a gold bug and a conspiracy theorist. I sunk my teeth right into what Bitcoin was offering and quickly basically spent all my time learning about that. And here I am today.
Wow. That's very, very interesting. And, I knew that the US had outlawed online poker and sort of online gambling, but I didn't know it happened so swiftly like that. And I've never really thought about the ramifications of what actually happened, not having played online poker myself or being involved in any bit of that scene. That's wow. Yeah, that's interesting. I mean, that's a great use case that just came overnight for Bitcoin, I suppose.
Absolutely. 100%. And yeah, like you said, it was incredibly swift. Nobody could have seen it coming. I believe it was April 11th. It might have been 13th. It was called Black Friday. And basically Thursday, everything was business as usual. Wake up on Friday and every domain had been seized. Bank accounts have been seized. I mean, it was just overnight in the blink of an eye. So it was definitely quite an experience and led me to not be trustworthy of leaving much money on exchanges before I even got into crypto or learned about the Mt. Gox hack. I had already been through a similar situation, so I've learned from that for sure. And now we'll be very careful about how much money I leave exposed to.
Did you yourself actually suffer financial loss there?
Oh, hugely.
Due to the seizure?
I just signed a 12-month lease, moved into a new apartment. Probably 70% of my net worth was online on 2 different websites. Wow. And when they went down, it was like my whole poker bankroll, which was used to earn income and also was a big part of my net worth.
Wow. That really freaks me out a bit. People don't realize how quickly these things can happen. You can imagine the same thing happening in Bitcoin if overnight bank accounts get frozen for all the major exchanges, all the ones that have got fiat on and off ramps. Imagine what pandemonium, it would be if it happened on a Thursday coming into a Friday. Yeah, what it would do to the Bitcoin price. God only knows what would happen. It would be absolute chaos. So
that's sure.
Yeah, absolutely. I think that's an understatement. Fortunately, with Bitcoin, we've got options. We can move the money around. You can custody your own money, whereas, as you said, with the online poker, you had your funds with the actual establishment. Yeah, so it's a bit of a tricky one. Okay, so you're obviously a massive Bitcoin fan. You got bitten by the bug, and that was run about, did you say 2011, 2012, or did I get that right?
2013 was when I first started getting into it and actually using it, and then I didn't really invest in it until a couple years later. I didn't really understand well enough to really invest in for a couple years.
I think, that's like quite a common sort of story. Like people first get exposed to it, hear about it, dig a little bit deeper, and then move on. And then you find out later that for some reason or another, they're drawn back to it, whether out of necessity or whatever, they get re-exposed to it. And then the second time they generally get bitten properly by the bug. Yeah, I've heard it quite a few times. And a gold bug, it sounds like it. So are you still full on gold?
Absolutely. I own a lot of gold. Right now, more of my net worth is exposed to gold than Bitcoin. I intend that to change over the next couple months as I have started scaling back into Bitcoin. But I have often said that if you own Bitcoin, then you should really own gold as well. And that if you don't own both, then there's likely a high likelihood that you probably don't have a full grasp of what Bitcoin is offering and what its challenges are, what its competition is. So for me, I think that the only way that we could really destroy Bitcoin or really send it back down to a very low threshold of adoption would be what Safedine argues in the Bitcoin standard, in that if we go back to a gold standard tomorrow, then the use case of Bitcoin would be greatly thwarted. For me, it's all about sound money and having it become a global reserve currency. Anything that gold can do, Bitcoin can do way better. There's nothing that is an advantage for Bitcoin. There's nothing that's an advantage for gold other than it's got like a 10,000 year first mover advantage. So it's been around and people understand it and trust it. But in terms of what its value proposition is and what it's really trying to accomplish, Bitcoin does everything better. But that doesn't mean that it is going to be so much better that it would be able to overcome the world moving back to a gold standard. Bretton Woods occurred over like a 2-week period, which is when the world left the gold standard and really put the US dollar into the reserve currency. And that happened in like 2 weeks. So this is something we were just talking about, how quickly poker was outlawed. The whole global monetary system could be upended in the matter of a week or two. I mean, that was in the 40s before there was internet. Things move so much faster now that if the world powers they came together and decided that, look, we're going back onto a gold standard. If that happens, then gold is going to the absolute moon, and then Bitcoin would really struggle. Its use case is now really going to have to take a back seat. So for me, feeling comfortable owning and investing in Bitcoin long term, I look at gold as a good investment in and of itself, but it's also a really good hedge for owning Bitcoin. That in my mind, one of those two is going to win out and is going to happen in my lifetime. And by having a decent amount of exposure to both, now I have given myself like guarantee that I'm going to win if one of those two does happen, which I believe it will eventually.
That's a great point. Great point. Go for it, Slava.
Socrates, I believe they printed so much fiat after Bretton Woods, because you can see at the chart how inflation of dollars just like skyrocketing. I wonder if they're going to be able to find so much gold to back all that fiat currency in 2019. I also have a question, because you know so much about both gold and Bitcoin are contraposed a lot. One of the stories that I heard about gold, and like you can probably tell a lot more about this, is that the way the prices are set for the gold market is pretty centralized. So a group of guys get together and decide what the price is for the day. I don't remember all the details, but if you know more, maybe you can share with our listeners about how the price is formed for gold.
Yeah, that's some great inputs and really touches on some of the biggest areas where Bitcoin is much better than gold is. And the first thing is basically how centralized gold is. I mean, if you want to know how much gold is in the world, what is the current supply of gold? How many ounces of gold are there? How are you going to figure that out? You would go to the World Gold Council. It's a centralized organization with tremendous incentive to manipulate those figures. If they decide that they want to be selling gold, they can mislead people in the supply, and they could do it on the other end if they decide they want to be buying gold. So there is a centralized organization that is no different than a bank or a government, in my mind, that is entirely in control of determining how much gold is available. And from that is basically the biggest impact, deciding factor on the price. So that centralized council is entirely in control of gold and basically the price. I mean, they could absolutely manipulate the price in any direction and in a big way, and it wouldn't be very hard for them to do it. And furthermore, nobody would really be able to know if they did. Like, am I going to go around to every bank and actually physically count up the gold that actually is available? Or am I going to just have to trust this organization to tell me not only the current supply, but how much new gold was mined? So they're in control of the stock and the flow. And that's all that matters in terms of money and a sound money system, is having that stock to flow ratio being sufficient. And that is what is so attractive about gold as well as Bitcoin. But gold leaves a lot to be desired in terms of we don't really know if what they're saying is true. And then in terms of, I couldn't agree more, they printed an absurd amount of money after leaving the gold standard in the last 60, 70 years, which is why the buying power has lost basically 99% of buying power has gone through the floor. So in terms of, is there enough gold in the world to back all of the money? And that is, the answer to that is yes, because the only thing that matters is the price. If you price an ounce of gold high enough, then it will account for all of the funny money that's in the system. And that's where I really am seeing, that's why I think it's so important to own gold, is if it is chosen to back the global monetary system, then I'm remembering off the top of my head, so forgive me if I'm wrong, but the price would have to be about $400,000 per ounce is what I'm remembering off the top of my head. And that's all that would need to be. Just based on how much supply of gold there is and how much supply of money there is, we can figure out how much would the cost per ounce need to be to back the entire world's monetary system. And it's doable, and you just need to come to the right price. And that right price is so enormous that it's hard for a lot of people to really comprehend. And the same thing could be said about Bitcoin. It has such a smaller supply that the price would have to be so much greater that the cost per Bitcoin would be in the millions. I think it would be close to $10 million per Bitcoin. And I wish I had these numbers exactly, but I think
that's fine. I think it's pretty clear, the quantum you're talking about, 10 million, it wouldn't make a difference, $5 or $10 million, you don't have to be exact. That's still a ridiculous amount of, a ridiculously high value per Bitcoin.
And I don't think think will happen in my lifetime is either $400,000 an ounce for gold or $10 million for one Bitcoin. I think one of those two things will happen in my lifetime. And the only way that could happen is if central banks acquire enough to back all of the funny money that they've printed over the last 50 or 60 years.
Yeah. I mean, it makes sense. And, one of the things that you brought up there, the centralized nature of gold and not being able to precisely, or should I say accurately, with certainty, verify how much gold is actually in existence or in the market is quite a problem that Bitcoin does address. Don't trust, verify, that famous Bitcoin slogan. Being able to actually verify the existence of 21 million Bitcoins and knowing how many are out in circulation, and also knowing how many have moved. I think they call it, I can't remember, days destroyed in terms of Bitcoin. So there's a lot of Bitcoins that just haven't moved for years. So it gives one a very good idea of what the marketplace is doing, how they're valuing the asset. You don't have, although you might have a lot more information in terms of gold, you just don't know the level of accuracy you're being provided with. Very, very interesting.
100%. You hit the nail on the head. For me, that's really what it all comes down to. And in terms of what gives Bitcoin its value, it's the deflating nature, the deflating supply, and the decentralization. Being able to verify how many Bitcoins are out there, that is such a game changer. And just because of that, I am very, very confident that Bitcoin will eventually win, because that is such a big aspect that even if we do go back to a gold standard, we run into a lot of the same problems that we had under the fractional reserve banking, that we have to just trust a couple people, and that's unacceptable. It's better than what we've currently got, but it is not acceptable when we have an alternative. And that's what gets me so pumped up about Bitcoin. It's the hardest money that humans have ever known. It's the most sound money that this earth has ever had. It's a complete evolution. And to be able to evolve in the financial realm, that's where real things happen. That's where progression happens. That's where entrepreneurs are made. That's where we really come together and make this world a better place. And I really believe that Bitcoin is going to be what is the kind of ramp to allow the plane to take off.
Yeah, no, I think we all agree on that. Yeah, so yeah, I don't think anybody disagrees with that. So I mean, gold, even if we went back to the gold standard, it would be a temporary setback for Bitcoin, because I think what you're saying is eventually, Bitcoin would win out in the end anyway, because probably what would happen is you'd go back to the gold standard, and before long they'd be back to the same shenanigans again, and with not being able to verify the quantities or the supply, the reserves, etc. Yeah, I could see them moving back again. It would be cyclical. It'll probably be another 10, 20, 30, 40 years, and you'll be back into some sort of fiat system again, and needing sound money again. Anyway, okay, so yeah, you're definitely a big fan of Bitcoin, definitely still a gold bug, massive proponent of sound money, and also a fan of Seyfeddin Ammous, which I am as well, and I think we all are. But you also trade, and you say you trade full time. So, I was exposed to Bitcoin first in 2012, and I only started dabbling in trading Bitcoin in about 2015, before the market really took off. But I'd say just out of pure luck, around the time that when I started dabbling with it, we didn't revisit the lows. Let me put it that way. It was just afterwards, probably about October, November, somewhere around there in 2015. I was only playing with small amounts. I spent most of the time researching, reading, and learning from experienced traders, and just trying to get as much information as I could. And obviously, I love Bitcoin. I believe in everything that it stands for. Everything that you've mentioned now is hard coded into my blood. But I also got bitten by the trading bug as such. And from that point, I've been trading ever since. And over the last few years, I've come across a handful of people that I still follow and enjoy keeping up with. Obviously, work commitments keeps me from doing it completely full time, but let's hope one day I end up there. But one of the people that I enjoyed following analysis of was yourself, Socrates. I think I found you on TradingView in, I think it was 2018, probably near mid 2018, when we were oscillating between like $6,000 and let's say 8,000. You were going 12 down to 6, up to 8, down, back up to 7.5. Yeah. And then eventually we oscillated a few more times, and then eventually we broke 6K. And what was interesting is, I would actually wait almost daily for your report to come out. It was so well sort of and methodically laid out. It would basically start out with like a little introduction. If you had missed the day before, you gave a summary of what your previous sort of analysis was, or the main highlights of it, what the result was, and how you were right or how you were wrong, and what the future sort of adjustment would be, having learned from either the mistake or the win or whatever it may be. And then you would lay out all the indicators below. You would have from top to bottom, like you would start off with perhaps candle formations, patterns, and then you would have maybe horizontals, then maybe diagonals, and then moving averages, and you would slowly go down, eventually get to stochastics, RSI, and all the rest of it. Kind of like a trading journal. You would end off saying what would trigger your next trade, what would invalidate it, what would confirm your idea, and that was that. And it was a quick digest. It was like a 5-minute read, if that. But it was, what I liked about it was in point form. You had heading, and then the summary, heading, summary. And you could just at a quick glance see what you were thinking, and sometimes I could look at it without even looking at a chart, and I'd just get a quick digest. So I think what I'm getting at here is, how did you start your trading? How did you get this way of sort of journaling your trading activities, your ideas? How did you get started on that sort of path?
Yeah, well, I really appreciate the kind words. That makes me very happy to hear that you've been following along for a while and finding some value in the stuff that I've been working hard to put out. So thank you very much
absolutely.
For that. And just a little bit of a background on how I got into trading and kind of developed my style was basically when I was playing poker for a living. I had the clear-cut goal that I wanted to make enough money from poker to be able to start trading for a living. I've always saw a lot of similarities there, and it was a common sort of saying that if you can make money consistently playing poker, then you can make a lot more money from trading, because it's all comes down to pretty much the same emotions and managing them and staying consistent and staying disciplined. So a lot of the things that I have implemented with trading has come from my poker background and how I was playing poker for a living. And a big part of that was kind of keeping a consistent journal and being very objective, or at least as objective as I could, about my performance. And always one of my strengths, I believe, is not being too results oriented. So I'm really not focused on did I win or did I lose? I'm focused on how did I perform? Would I take that trade again? Would I play that hand the same way? So to do that really requires consistent sort of journaling or note-taking, some way to keep yourself accountable. A lot of people have different ways to do that. And I noticed that posting publicly my trades and my analysis really helped me to stay accountable, because one of the biggest things with trading is just being disciplined and being patient, and knowing that just because you've been on a winning streak, that you don't get a big head or start taking on too many trades that really don't fit your appetite, that aren't really in your sweet spot. And the best way that I found to do that is by kind of putting myself on the hook publicly. Making a bad call publicly seems to hurt a little bit more than just making a bad trade, and I can really identify that. When I'm putting myself out there in the public, it forces me to identify whether or not that this is something that I need to learn from and improve on next time, or if this is just an area where I need to take some lumps and pat myself on the back for executing in the way that my process would determine. So essentially, that is how that process came about. Was a way to really keep myself accountable, kind of hold my feet to the fire, even when I wasn't trading. To if I didn't have a trade set up for today, still going through the analysis and talking about why I was or was not entering or exiting was really a good way to keep myself accountable and stick to a consistent process, that I'm always looking at the same indicators every day and going through the same process at the same time. Then that gives me a feel for, like, sometimes I'll be going through the indicators and now a lot of them are showing the same kind of buy signals or bullish indicators, and now I can kind of get a feel for, wow, it's been a long time since I've seen everything line up this nicely, and last time it lined up this nice, so that sure worked out well, so maybe I'll bet a little bigger this time than I would normally, that sort of thing. So for me, the consistent process is extremely important for keeping myself accountable, and that's kind of how that has come about in a public fashion.
Yeah, and sort of being agnostic to sort of which way price goes, not being sort of sitting in the bear camp or sitting in the bull camp and, throwing your toys out your cot if it goes the wrong way. Sort of just looking at the indicators, and if price action goes up, then it's going up. One of my mentors that I still work with today said to me that actually a lot of trading is knowing when not to take the trade. And actually you don't have to trade all the time. And I must say, in the beginning stages of trading, I found that one of my biggest weaknesses was I always felt like I had to be in a trade. I was like, if I wasn't in a trade, I wasn't working, I wasn't making money. So, and then you end up like forcing the trade, you end up forcing trades that, really didn't quite match up to what you predefined as being your confirmation. And I've heard that a lot of poker players make good traders. That's right. I mean, you've got, I think, another guy who's quite sort of popular on Twitter. His name's Doug Polk. I think he was a professional poker player at some stage. And if I'm not mistaken...
He still is, and is one of the best in the world, as a matter of fact.
Oh, is he really?
Yeah,
oh, wow.
He sure is. It's to the point where nobody will really play him. He's gotten so good that nobody will really play against him because they know that they're going to lose. So that is the problem that the best players have. And I certainly never got to that point, but I did play against him when he was playing smaller stakes. And I have been a fan of his for a very long time, since like 2008.
Wow. Yeah. And I suppose working out probabilities and being consistent and sort of agnostic to the outcome and more about the performance and the process, as you said, is a big key to it. And poker is all about that, right?
100%. Yeah, you can get it in with pocket aces against pocket kings, and then have the other guy hit a king and you lose all your money, and you can't sit there and say, well, I should have played that differently. No, you just got unlucky, and the probabilities were in your favor. You take that bet every single time, 100 times out of 100. And getting used to that, kind of it being out of your control at a certain point, you just do everything that you can to execute properly, but then at a certain point it's going to be out of your control, and getting used to that and then learning how to not be results oriented is absolutely one of the best things that you can learn from poker, in that you just got to go with an edge, and if you lose, then you can't even be upset because exactly
that's it. You hit the nail on the head there, playing the edge. And statistically, if you win 51 times out of 100, you're a winner.
100%.
Okay. Did you start trading on Bitcoin itself, or were you in traditional markets? Because as I followed you over time, it seems that you've delved more into the traditional markets, the SPYs and that, or at least your analysis is. I don't know if you're actually trading it. Did you start with Bitcoin? Did you start with traditionals? Are you trading traditionals?
Yeah, I'm trading traditionals, and kind of in a roundabout way got started with Bitcoin. Kind of. Well, so back in 2010, when I was playing poker, I started to teach myself how to trade, and the markets were just coming back from '08. It was a really good time to be in the markets, and I was, moving forward with my plan and teaching myself how to trade. And that first foray, it did not go very well, which is most people's first experience with trading. And it got to the point where I basically abandoned what I had been learning and kind of came to the conclusion that everybody telling me to buy and hold, that they're right, and that trading is, it's a bunch of voodoo, the technical analysis, yada, yada, yada. I basically just gave up on it and determined that buying and holding was the way to go. And I became so convinced of that's basically what led me to become a financial advisor. And that's all that I did, was tell people to buy and hold mutual funds and index funds, and just buy and hold and keep contributing. So that's basically how I got into financial advice, was due to my lack of success in trading the traditional markets when, everybody was making money with that market was going crazy in 2010, 2011. So I basically abandoned it. And then when I got into Bitcoin and started seeing, I just did a lot of studying of the historical patterns and seeing this chart with it just was repeating bubble after bubble after bubble after bubble. I could just get clear as day. And it made me think that, man, buying and holding through bubbles, just that there was something there that just didn't make sense to me. And that's when I really finally found some success in swing trading, was in crypto.
So were you trading Bitcoin in 2017 for the parabolic rise?
Yep. Sure enough, Bitcoin and Ethereum. And that was when I, in October of 2017 was when I sold my business to go full-time into trading.
When did you get out? Not get out as such, but the blow off top in 2017, December, I think it was 17th or 18th, somewhere around there. And then we dropped down, and then we had a lower high in early January. Did you get out anywhere near there? Where did you get out? Did you get out?
Yeah. I did very well. I was basically taking partial profit the whole way up on Bitcoin. I was pretty much holding through and got out about 12,500 was the area that I exited, and I withdrew the money. Haven't even thought about buying back in until these last about month or so, and we broke through 62. And then with Ethereum, that was the one that probably the best trade. It was definitely the best trade that I've ever made in my life. And I was actually able to sell pretty much the exact top of it due to seeing Bitcoin breaking down, and it was still going up. So I was selling it all the way up as well. So it was only a portion that I sold at the top. But once it got to 600, I sold about 30% of my position. Once it got up to 1300, I exited the rest. And that was basically, that's what made my whole year and then some. So that worked out very, very well for me. And haven't even thought about buying back in until basically these last couple months.
Yeah, that's incredible. And for Bitcoin, is there anything specific that you saw in terms of breakdown? What was your go-to sort of confirmation that, listen, I think this bull run could be over. It's time to exit the rest of, the balance of your funds? Was there a specific indicator or a specific sort of price action or formation or something that you saw that really told you, okay, look, I'm out. I'm going to sit this out now. This could be the end of the parabolic rise. It's not going back up above 20,000. I'm going to sit this one out and see what happens. Was there something specific?
Yeah, definitely. It was mostly just kind of a feel. Like there was not a necessary indicator that told me to get out, but it was more just a feeling that I had. And it's tough to say, but it is what I trust more than almost anything else, is just the feeling that I get for the market sentiment, and seeing just how crazy everybody was really what had me on red alert to, like, I need to be ready to get out of here at the drop of a hat. And I remember very vividly that it was December 18th and 25th. I'm looking at weekly candles. The price went from, that's basically topped at 20,000, and then it sold off in 1 week from 20 down to about 11,217 or so on Bitstamp. So that occurred in 1 week. And that right there was like hair standing up on the back of my neck. Like, this is either going to be, the best dip buying opportunity. Anytime the price had dipped that hard throughout that bull run, it had been an incredible opportunity to buy. But here I was really, wondering, was that the top? And here, if we can't create a new all-time high from that dip, that's what I was really watching for. So from there, we did bounce up to about 17,000 in the next couple weeks. And there, I'm thinking, okay, we might be ready to go again. But when that failed to create a new all-time high, that following weekly candle, it was bearish engulfing. It quickly retraced back down to about 13,600. And at that point, I'm looking at like, man, this if the lows here, both those candles lows was at 12,800. If those get taken out, I need to be getting out of this market. So that was pretty much what I was looking at. That wasn't a specific indicator, but was really just a feeling that I had, and then kind of confirmed by failing to create a new high off of that bounce.
Yeah, I think that would have been a great place to get out, to be honest. I mean, you would have had to be extremely lucky, and I'm sure there were a lot of people who were near the 15 to 19,000 sort of region. That happened very quickly. I mean, that whole last parabolic rise, I mean, it started, it was like 1 month that took us basically from about 10,000 to nearly 20,000, 20 days or something like that. It's quite incredible. That last stretch was really, really, really quick. I think it was like 3-4 weeks, and we hit the top. And to get out anywhere above sort of 12,000 was really good going. Slava.
I remember that day I was in Mauritius, and the price in Poloniex reached close to 20,000. I had a sell order at 20,000, but it actually never reached 20K on Poloniex. And so I did not exit at that point. I was like, it's okay. It's going to go up tomorrow.
Oh no. You were left standing at the altar just waiting. Huh?
I was like, yes, it has to be 20,000 for me to exit. Otherwise, it does not make any sense.
You see, it's a psychological thing, isn't it, Slava? I mean, I tell you what, so much of trading is psychological, and that's a great example right there. You had your number, and you want that round number, and you wanted it to hit that price to sell, and you weren't prepared to sell for a penny less.
I have a question to both of you, guys. So when you trade, do you think of your portfolio in terms of Bitcoins or in terms of US dollar? Or any other currency for that sake? Yeah.
Socrates, I'll let you answer that first.
Okay, great question. And for me, if it is a bull market, I'm thinking in terms of Bitcoin. And if it's a bear market, thinking in terms of USD. So in 2018, I was not really thinking about increasing my Bitcoin portfolio. I was thinking about increasing my USD net worth. And now that it looks like we're starting the next bull run, I feel confident that the confirmation is in for me. And so over the last month or so, I've started to convert my thinking back to being in Bitcoin. And now I will be holding my trading role in Bitcoin, and I'll be trading on places like BitMEX where you can use Bitcoin as a margin. And whereas in the past, I was in USD and using USD exchanges to trade on margin.
Yeah, that's a great answer. I mean, I can't do any better than that, Slava. But to be honest with you, I haven't. That's not the way I do it, but it's certainly the way I'm going to think about it from now on. But it makes total sense, right? I mean, if you think about it, in 2017, as the price was in the bull market and rising, everybody was trying to accumulate Bitcoin. Every dip you're trying to accumulate more and more and more and more. And sort of it would only make sense that in a bear market you'd be thinking the opposite. Every rise you try and sell some. So you got to be thinking and making more USD. So great answer there.
I have another question to Socrates. I'm very interested in his answer because Socrates, you said that you were a financial advisor for traditional markets for a while. And so when we're talking about Bitcoin and cryptocurrency in general, I just think there's a lack of investors in the sense that a lot of people they don't have a lot of options, right? So you can either buy Bitcoin, you can hold it, or you can go to an exchange and start trading. But I think, and let's see if you agree with this, investing is just very different comparing to trading. Whereas in trading, you look at different signals, buy, sell signals. Traditional investment management looks kind of like procedures in a sense, and then rebalancing happens a lot less often than with trading. Do you think there is just not like lack of understanding as far as trading goes and cryptocurrency markets? Or how do you look at investing and cryptocurrency markets?
Yeah, I definitely think that there's two ways to look at it and two ways that I do approach crypto. And I have a trading portfolio and I have an investing portfolio. And basically, I want to trade successfully so that I can add to my investing portfolio. And I hope to be able to trade well enough and earn enough that I can eventually just be an investor and don't have to trade anymore. That should be the goal for most traders, is to basically work yourself out of a job. And so that is my goal. And when I am a swing trader, and I am moving in and out, looking at taking advantage of short-term swings. Generally, like 1 month long price movements is the ideal sort of trade for me, is to be in a position for 1 month and have a big move and then get out. So I do trade actively on a daily basis, but I don't think that's mutually exclusive from investing. And most people don't view it that way from what I can tell. So my investing portfolio is definitely going to have a lot of Bitcoin in it. So it's going to probably be at least a 50% allocation of my long-term investing portfolio will be in Bitcoin moving forward if everything keeps progressing as I see fit. And that is based on my risk tolerance and my time horizon, as well as my belief in Bitcoin. So anybody that's young, I would recommend a more aggressive allocation. I would when I was an advisor. I'm not anymore. So just to clarify, but if you're younger and you've got time to let it grow, then you should be comfortable with a little bit more of an aggressive portfolio, a little bit more aggressive allocations. So in that case, you can look at adjusting what you are allocated in. Like you said, investors do it much less often. Maybe you do it on a quarterly basis. Maybe you only do it once a year to look at what's working, what isn't, and make some adjustments. And I would base those percentages off of pretty much age and what trying to accomplish. And for younger people, I think it's a really good idea to have significant exposure to Bitcoin, as long as you understand what it is, what's going on, and you're comfortable with the volatility. And for middle-aged and older people, I think it's a really good idea to have 1% to 5% at least of your money in crypto, because the risk of not owning Bitcoin is way greater than the risk of putting 1% of your net worth into Bitcoin. In that case, if something really does happen where Bitcoin goes to the actual moon and really does become a reserve currency, all you really need is 1% of your money in there, and you're going to be set. So for somebody that is wanting a less risky sort of portfolio, I would say that you stick with the traditional stuff, but still put just a very 1% into Bitcoin, and then you're really just doing it as a hedge. And that's a really smart bet for anybody to make, regardless of how little risk you're wanting to assume.
And I guess one of the great things about cryptocurrency and Bitcoin specifically is that it's not correlated to traditional assets, or has very loose correlation. So it's inverse correlated, if I understand correctly. So if traditional markets go down, Bitcoin might actually go up. And so this helps you to offset losses in traditional markets and manage risks.
Yeah, I can definitely see your point of view there, but I don't necessarily agree. I do think that that it's still a little too early. I mean, I think it's basically an uncorrelated market. I don't think it's got an opposite correlation, and I really don't think that a falling stock market would be good for Bitcoin, especially if we're really going to crash and enter the next, basically big sort of recession. If that situation happens, then I really do not think it would be good for the price of Bitcoin right now, because it's still so early and so new and so unproven. Down the road, that could change. And the reason why I'm confident in that assessment is basically just looking at what happened with gold in 2008. People were running around with their hair on fire and freaking out and worried about, being able to feed their kids, essentially. And because of that, gold also sold off. And you would expect a situation like 2008, 2009, with all the quantitative easing and all the banks going out of business, you think that'd be the perfect environment for gold to really go to the moon and skyrocket, but that didn't really happen. It was in a huge bull market too. Gold was just crushing. It had gone from 665 up to 1,000 in the matter of like 6 months or so. And then the mortgage crisis hits and it just dumps. It dumps from 1,000 down all the way back down to 690 from '08, basically throughout 2008. So seeing that action makes me, in a mature market such as gold, makes me really concerned about what could happen to Bitcoin if the stock markets really do enter another sort of crashing situation.
Yeah, sure. No, that makes total sense. I mean, people got to put food on the table, right? You can't eat the gold.
Yeah.
It's a bit of a different aspect for trading. I personally have had very limited exposure to trading, but something that was very interesting to me was concerning automated or bot trading. I remember, Wes, that we talked about it, if I'm not wrong, last year.
Yeah.
But we did not get it to start working on it really. But this is very interesting. I wanted to know what's the importance of bot trading when we're talking about cryptocurrency and Bitcoin in particular?
Yeah, good question. So what's the importance of bot trading? I would say that it is definitely important. It creates liquidity, and without the bots continually moving in and out with their orders in the market, in the order books, then there would be significantly less liquidity. So I definitely think that bots they add value to the space. However, I don't really have experience. I've never traded with a bot. They're really for scalping, from what I understand. The large majority of bots are just for very, very short-term scalping, like the 1 minute and the 5 minute charts, just getting somebody to, take a market order that's 1% away from the current price and then getting in and out right there with the bot. That is what the majority of them are best suited for, from my understanding, and that's just not my style of trading. It's certainly a viable method and an approach, but it's just not how I like to trade. So for like swing trades and for positions that are have like a month time horizon or so, using a bot is not really going to be advantageous as far as I can tell. But I still do think that they're good to have, because that they provide liquidity, they add a service, and they get paid. They make a little money for what they do, and it seems like a fair environment as far as I'm concerned.
Yeah, true. I mean, at the end of the day, they're participants within the market, just like anybody else. It's just perhaps they're used by more sort of high frequency traders and ones that are trying to work off a very, very small edge. And that's why like you referred to it, it's called scalping. I think a lot of scalpers use bots. So the magic question, are we in a bull market, Socrates? Are we actually in a bull market?
I would have to answer that question, yes, but with
caveats.
A little bit of reservation. Could change that very quickly. Being this early on in a reversal sort of formation can be very, you really don't want to get too, overexposed or overexcited too early on, because that's when the best sort of traps can happen. So right now, what I've really, really been wanting to see is a significant correction and higher low above 6,200. As long as we haven't gone back to retest 62 for support, I'm feeling kind of uncomfortable. I'm feeling like this is an unproven reversal. We've got the higher high, but we do not have a higher low. And I really want both to say that, yes, the bottom is in and we have a reversal. Like I want to be one of the last people to say that the bottom was in, opposed to one of the first. I don't want to be, trying to catch the exact top or the exact bottom. I want to be waiting for, kind of like how I felt and got out at the top, not at the exact top, but back in 2017, kind of looking for the same situation here, where it's like, if this can create a higher low, now I've really got the full picture in my mind, where I really want to be betting big. In last week's correction, it was, it's significant, from 87 down to 76, but it's still not like, that's just a small one candle kind of dip. That's not a real pullback. So the reason why I say it is a bull market is because of the 30 period moving average on the weekly chart. That is how I determine trend.
Are you looking at the simple moving average?
Yes, I'm looking at the simple moving average. I use exponential moving averages for support and resistance and to signal entries, and I use a simple moving average to determine trend. So basically, anytime the moving average is going up If it's angled upwards, that tells you that the price is moving up and that the trend is up. So I like just a simple moving average for that. And it's a very basic way to determine trend and very reliable. And it's just, all based on math. If the thing is moving down, then you're in a bull market. If the thing is moving up, if it's moving down, you're in a bear market because the average price is decreasing. And if it's moving up, you're in a bull market. So that just started turning up here when the price basically broke through 62 on the week of May 6th, 2019. That is when the first time since 2018 that the moving average started going up. And so that was the first time that I was like, oh, wow, maybe it's time to buy Bitcoin. And whenever that's moving up, I've got to say that, yes, we are in a bull market. But when it is this new and it's only starting to turn up and hasn't been for a while, it could easily, reverse back. In a nutshell, yes, the trend is bullish in my perspective, but I'm still waiting for that higher low to really be super gung-ho that it's time to really get all in that I want to be in.
Yeah, and I suppose until you do get the lower, what do we call it, the higher low, you don't really know where that pullback will be going to. And as soon as you've got that level and that sort of that horizontal support is in, then you can sort of buy in with more confidence. We've got our higher high, what do you call it, a higher low, and then, yeah, and then you'll get, be buying the dip all the way up. So as opposed to 2018, when you're, sort of shorting the rises, you'll be buying the dip again. And to be honest, you're right. You don't have to catch the bottom. If we really are in a bull market, I mean, we've got probably many months of price action going up. If you look at the bull market of 2015 all the way to the end of 2017, that was 1.5, nearly 2 years of rising price. Yes, with dips along the way, which were opportunities. But at the end of the day, catching the bottom or catching the top is not the name of the game. I think catching most of the journey would be great, but end to end, very unlikely, and you could probably hurt yourself. How much, sort of in your analysis, how much weight do you, if you can define it, weight do you put between sort of fundamental analysis and technical analysis? Do you find that you look at things more from a technical analysis point of view? Or are you affected by fundamental analysis? How does that work in your mind?
Yeah, I think that they should always be married and that they should never be looked at as mutually exclusive. And I will basically trust the technicals above the fundamentals always, but I will look for situations where the fundamentals can help me to time entries and exits, as well as look for them to basically be in agreement. So whenever the fundamentals are extremely bullish and the technicals are extremely bullish, then that's something that I want to be getting into. And I've also noticed that fundamental events can be great ways to help time entries. Trading is all about timing the market and timing when to get in and out. If you are long and you're early, then you're wrong. It doesn't matter if the market ends up going up. You need to have the right direction and the right time. So that is where I look for fundamental events that can potentially help me to time the market. First thing that comes to mind is the CME futures. There has been tremendous volatility that has occurred shortly before or after the quarterly futures expire on the CME exchange. So seeing that and then seeing price consolidate and like a Bollinger Band squeeze, like price getting really tight and it's ready to make a move one way or another, and then seeing that the CME futures aren't going to expire for another week, that has been very, very helpful for me to say that now I'm going to wait to time my entry from that it's closer to that expiration date. Another example, probably the single best example, was, I believe, it's Carter Thomas. He's got a YouTube channel and he's on Twitter. Very sharp guy. I've learned a lot from him, and he basically called the top of the 2017 Bitcoin run down to the day, right down to the exact day that it topped, was able to call that, and it was based on a fundamental event. That is when the CME first started offering the futures. So basically he was saying that this is a buy the hype and sell the news type of event, that everybody is super, excited about this happening.
Euphoric.
And this coming up.
Yeah,
exactly. So that this is already priced in, and that once we've already bought the hype and the hype is overwhelming, and now it's time to sell the news. So he was able to time that top down to the day based on a fundamental event. And that is something else that I find very intriguing. Forks can be very good, fundamental events to trade. The halving is like the number one thing that matters right now. And all of my trades are set up based on the upcoming halving on Litecoin and Bitcoin. So seeing, again, a fundamental thing that's very bullish in line with technicals that are very bullish, that's something that I just love seeing, and will be using that similar situation. I think the halving will be very similar: buy the hype, sell the news. Once that halving goes through, I'm thinking there's going to be a significant correction, and I'm going to be using that date to sell, and it won't be based on anything other than that fundamental event.
Good point. I mean, I remember, I think it was 2016, the Bitcoin halving. There was a significant rise going up, leading towards it, and then a sell-off, sort of sell the news event after that. And I mean, Bitcoin only really started taking off again in 2017. And obviously all the trouble with the block size debate and everything, and SegWit, Bitcoin took a bit of a knock in terms of price. And it was only really, if you think about it, from about mid 2017 that Bitcoin started taking off. So there were a lot of fundamental events happening in 2017 that definitely had an effect on price. I think that fundamental events can tell you whether or not to sort of buy or buy or sell, but I think technical analysis can be very good at timing in terms of, more of a fine-tuned pinpointing entries and exits and things like that, and give you sort of general sentiment of the market. Are we generally bullish or are we generally bearish? One of the things I use, if we go up to the monthly scale, is the 21 EMA. And, it's very simple. If we're trading above the 21 EMA on the monthly, bullish. If we're trading below it, bearish. And if you look at Bitcoin on Bitstamp and you check that out, you'll see that it times it good enough to get you in and out. So what are your favorite indicators then? You use MAs, you use EMAs, and you're obviously using the normal tools, horizontals, diagonals, things like that. Do you use Ichimoku clouds, which I know nothing about?
Yeah, I do utilize Ichimoku clouds. I find that very, very powerful, and we'll use that to identify trends. It's another way that's not quite as simple as just one moving average, but once you learn how it works, it is a pretty simple way to identify trends. Basically, if the cloud is green, it's bullish. If the cloud is red, it is bearish. And then there are a few other things there, But it is a really good way to identify the trend and also to time entries and exits. I would definitely say it's one of my favorites. And I do think of it as a kind of a hierarchy of indicators. In a situation where there are multiple indicators telling me different things, it's important to know which one is most important and which one I'm going to listen to. So the EMAs are going to be my most important in terms of signaling entries and exits, identifying trends, and then support and resistance as well. So EMAs are at the top of the totem pole. Horizontals are right there in terms of identifying support and resistance. Horizontals are probably my most important. And then below that is trend lines. So I really love trend lines. I love moving averages, and I love horizontals. So those are the things that I'm really looking for. When there's a good trend going, there should be a good best fit trend line, and ideally I would see a parallel channel, and then would use the moving averages to time entries and exits, and also identify areas of support and resistance. The Ichimoku cloud is more something that I use on higher time frames, not really to actively swing trade, but more to just confirm. So like I just see the 30 MA turn bullish. So let's take a look at the Ichimoku cloud, see if it's turning bullish as well. So I'm not using it all the time, but it is very, very powerful. Outside of that, I love pattern.
As a confirmation tool, sort of to see if there's confluence in with your other indicators.
Exactly. Yep. Which is important to me. Always like seeing confluence from multiple indicators as confirmation. So outside of that, patterns are some of my favorites. I feel like I'm good at identifying them in real time, and they are very powerful ways to avoid getting chopped in and out during points of consolidation, and also great ways to identify targets for price targets. And then I also really like volume. I like just traditional volume, and then also volume profile. And we'll also throw on the TD sequential for trend exhaustion. So I want something to identify a trend, identify support and resistance, identify entries and exits, and then identify strength of trend versus exhaustion. And those are the tools that I use.
And recently I've seen you with Tyler Jenks and Leah Wald on their channel with Hyperwave. You're a big fan of the Hyperwave, aren't you?
100%. Yeah. Like I kind of mentioned when I first got into Bitcoin, I just started seeing all these repeating bubble patterns. And I started wondering, well, how do you take advantage of this? How do you trade bubbles and parabolic markets? And I went to Google and I went to the library, and there is just very little information. There's the parabola, the parabolic curve that can be drawn and has some rules. But outside of that, there really is very little information about how to trade in bubble markets. So that's when I found Tyler Jenks very early on when he just kind of started his channel. He was one of the only people really talking about how to trade in these markets. So I found him early on, was a early member of the Hyperwave Telegram group, and have since gotten very good at identifying and trading that pattern. It's one of the most common bubbles. It's a specific type of bubble, but it is very common right now. And yeah, I love the pattern.
Yeah, I mean, for those who don't know, I mean, the Hyperwave sort of shape, if one just pictures the traditional bubble that you always see on TV or in books, when they talk about the tulip bubble or those type of things, the Hyperwave takes a very similar sort of shape. When I first saw it, I just assumed it was just a bubble, and I thought to myself, oh, this guy's taken a bubble and labeled it in my my naive way of thinking. I was also watching Tyler Jenks' channel nearly from the beginning too. I didn't join the Telegram group in that due to other commitments, but yeah, I've also been a fan of it. I don't know as much as you do, obviously, because you guys are writing a book together on it, aren't you?
Yep, we sure are, and have just been finishing up with the first edition of the rough draft. I've been working really hard on that for a few months, and now just yesterday we had our conversation, and it's right at the final stages of having the rough draft completed. So I'm really excited about that.
Wow, that is really exciting. And do you anticipate that it's going to come out in sort of digital and hard copy, or how are you guys doing that?
That's our game plan. We're going to be approaching publishers here shortly, and hopefully we'll be able to get it published in traditional bookstores, and then also have like an ebook as well.
Okay, and I mean, not to let anything out the bag, but Hyperwave itself is one sort of strategy or one way of looking at the market. Would a complete novice be able to read this book, or do you think that one does need to have a little bit of foundation, or is that little bit of foundation in the book? Or what sort of what could the reader expect?
Yeah, great question. And that was something that was important to us, to be able to write a book that is accessible to people who are even brand new to technical analysis, because the Hyperwave pattern is it's easy to learn, even if you have no background in technical analysis. All you really need to understand is trend lines and weekly candles. That's really the only things you need to understand to fully employ the buy and sell signals from the system. So we did include an introduction to technical analysis that will not be of any value to somebody like yourself who already understands the difference between a stochastic and an RSI. But for people who really do not know anything about technical analysis, we have a brief introduction about what is a trend line, what is support and resistance, and what is a candle. And with that, that's really all that you need to know to use the Hyperwave pattern and to trade it.
Oh, that's great. That's a good idea. I think that, that will make it accessible to so many more people. And, through the Hyperwave, they might even go and investigate more and learn a bit more about trading. So here's another question I have for you. We haven't got too much longer. Don't worry, I won't keep you too much longer. The Hyperwave, your guys' predictions was the Hyperwave phase 1 line was going to take us back to round about 1,000. I remember Tone Vase was saying his prediction was somewhere around 1,300 or something like that. And I think Tyler was saying $900. Let's just call it 1,000 flat. How do you feel about that now? Do you think it's still obviously anything's possible, but we definitely are in a bullish stance. We're getting, even on the daily, we're getting higher highs and higher lows. There's a lot of things pointing up. We're above all major moving averages, above EMAs. Even the monthly's made a higher high. Anything can happen. You could have a black swan event. You could have that poker sort of event where tomorrow US turns around and bans Bitcoin exchanges or something like that. I'm sure that would be a great cause of black swan event. that sends us to sub $1,000. But now hindsight is 2020, I realize, but now looking at it, what do you think the chances are that we are going to phase one line, $1,000?
Yep. Great question. And every day that goes by, the chances in my mind are decreasing. And I think it's a very low probability at this point. The last chance is basically if we throw back to 6,000, if that doesn't hold and we fall back below that major area where there's a ton of volume and we're unable to hold that as support. If that happens, then I'm going to be thinking there's a very realistic chance that we go back to retest 4 and even 32. And in that case, I wouldn't really be expecting it to hold after getting such a massive bounce. And if we're unable to really establish a higher low and move forward, then that will change a lot. But as it stands right now, I'd give it maybe a 5% chance that we go back to 1,000, maybe a 5 to 10% at most. I think it's very low likelihood at this point. And yeah, that is a prediction that I was making for months. And I was actually even thinking a little bit lower. I was looking down towards the $800 mark and expecting like a real spike low, like a wick down there. And then on some exchanges, like I was expecting mayhem, kind of like we saw at the top where there was like a 10% premium, 15% premium on some exchanges over another, just complete mania. I was expecting the same type of panic at the bottom where there's
price
a 10%,
discovery.
Yeah, where there's these huge premiums and discounts on different exchanges. There's people just absolutely freaking out, running around with their hair on fire. That's what I was expecting. That's generally how bottoms are found in bear markets.
Yeah.
It's like nobody is thinking is the bottom. That's what I was preparing for and calling and expecting. So that's what I was thinking. On some exchanges, we were going to wick down really low. I was going to be ready to be buying anywhere in that area. So definitely, it looks like I was absolutely wrong. And if that's the case, I'm totally fine with it because there's the difference between being wrong and missing out on opportunity and being wrong and actually costing yourself capital. And that's the biggest kind of distinguishment that a lot of people need to understand. Like if you miss the bottom, it's fine. You just missed out on some opportunity. You still have all your capital intact. Whereas if you're continually trying to buy the bottom and you're wrong and you thought 6K was the bottom, so you bought there and lost and then did that a couple more times, that's costing you actual money every time that happens, which is way different than only costing opportunity. And if you're actively buying and selling, you have to be completely comfortable with missing out on opportunity. So if the bottom is in, which I do think is most likely, and we don't reach the target of 1,000, then I'm going to, just be totally fine with it because I stuck to my guns and I, stayed patient and now I'm not going to be missing out because I'm ready. I've got backup plans in place to go ahead and buy if I was wrong about that call.
Correct. Yeah. And I absolutely could not agree with you more. I mean, the one thing that I will say is that I was waiting for people to be running around with their heads on fire when we were down at $3,200 or $3,300. And it didn't feel like a bottom to me. It really didn't feel like capitulation. And I think that was the one thing that really threw me off. I think the second time we came to revisit the 200 SMA on the weekly, and we bounced off that again. I really thought that was going to be the move that takes us past 3,250 or so and forms a lower low. And then looking at the divergence on RSI, I thought, then we would move back up. And it didn't. It was more like a little bit of a bear trap and we shot straight back up. But yeah, you're right. You don't need to catch the whole move. And one of the things I've learned is that the market will be there tomorrow with new opportunities. And if it's not tomorrow, it's the next day. The market will continue. So, what you don't do today, you can, in trading at least, you will find further opportunity down the road. There's an abundance of opportunity. Okay, coming sort of towards the end here, who would you say has had the most influence on your style of trading?
Definitely Tyler Jenks. He's been a mentor of mine for months now, and I've just learned a tremendous amount from him. I have a great deal of respect. I really believe he's one of the best traders of his generation. I mean, he rubbed shoulders and knew a lot of the greatest technical analysts that really the world has ever known. He was friends friends with Wells Wilder. He learned the TD sequential system from Larry Williams, created it.
It's crazy.
He was friends with the guys who wrote the book on Elliott waves. Like he's got just such a wealth of knowledge that anytime he talks, I find myself soaking it in. And by far, he's had the greatest influence on my career as a trader.
It's amazing that he's rubbed shoulders with all these people that, you only see their names in books or in courses and things like that. And he's probably had lunch with a lot of them.
Absolutely.
Amazing that to learn a strategy straight from the horse's mouth, No, that's great. Look, Socrates, it's been really great having you on. For those of people out there that want to connect with you, where can they find you? How can they get in touch?
Yeah, I appreciate that. I am on Twitter and I'm on TradingView. Socrates is spelled kind of how it sounds, Sawcruhteez. That's my name on Twitter. And TradingView have also started doing daily podcasts with Tyler on YouTube. That can be found under the Hyperwave YouTube channel, also under Lucid Investments. And we are on a daily basis at 4 p.m. Eastern Time, taking a look at Bitcoin as well as traditional markets. And that's where I'll be. Feel free to reach out or leave comments or likes or dislikes on anything that I do.
I think they'll only dislike it if you say that we're going back to $1,000. Right now, you're going to get plenty likes. And the Hyperwave show is great, guys. If you haven't seen it yet, go subscribe, like, share, comment, everything. It's great. There's a wealth of knowledge there. Tyler Jenks gives a lot of free information away. I certainly have learned a lot from watching his show. It's really great. Socrates, it's been great to have you on. I hope we can have you again later and we can relook at price, perhaps with a video next time, and we can see your charts. But thank you very much for coming on and have a great day, man.
Thank you for having me. That was a pleasure. It's great to meet you all, and keep up the good work.
Okay, cheers.
And that brings us to the end of another episode of Let's Talk Crypto. I really hope you've enjoyed the show. It was a very interesting one. If you did, please leave us a like, a share, or leave a comment below. And subscribe by pushing the little bell button if you're watching on YouTube. It would also help if you're listening to this in iTunes if you gave us a rating. We hope to be bringing you many more insightful interviews over the coming weeks. With that said, enjoy the rest of your weekend and we'll catch up next week.